welcome to the Trading Bell. We're here at Absa headquarters and we want to speak to Elizabeth Irongo, who is the head of Absa Asset Management, to understand how they're navigating these particular times and what are they doing to ensure that you don't lose any of your coin that you have invested with them. Elizabeth, welcome to the show.
Thank you very much.
Great. I'm sure first our viewers would want to know, what does Absa Asset Management have in its portfolio? Would you kindly care to introduce that for our viewers first?
All right. Yeah. Thank you very much. I think as a way of introduction, asset management or fund management services is solutioning clients around their investments professionally. So we give professional fund management services, whether to an individual, to a corporate, to an NGO, to a church, anybody who has money and would like to invest in the capital markets, we are the go-to person. So here at Absa Asset Management, we say that we are a multi-asset manager. What that means is that we are not specialized in any one particular asset class. We cover a wide range of asset classes and give you returns based on those asset classes that you choose. So case in point, we will give you solutions in the unit trust funds, which you know, collective investment schemes. And these are regulated capital markets products which pull money together from different people and then invest in a certain style. So you find in our suite of unit trust funds, we do have the low risk funds, which are called money market funds, either in dollar or in shilling. And you'll also get the long-term funds which give you capital growth, like equity fund. So you have investors who are looking to invest in listed equities, but they don't know which securities to choose. We pull that money together. We do the research as a fund manager. We invest in a portfolio and they wait back and get the returns. So really, really amazing. And then the other product that you find under the unit trust funds is fixed income funds, and you'll also find balanced funds. So all these will have different styles just to meet the different objectives that the investors have. On top of that, as a fund manager, we also do bespoke portfolios. Bespoke portfolios is what most people will call wealth management, where we speak one-on-one with you and we understand your profile as an investor, and we give you solutions that are tailor-made for you. Case in point, we can buy for you an offshore security or product, a structured note maybe, and give you exposure, say, to the developed markets, to the emerging markets, and things like that. Also, in the same breadth of the wealth management, we can also buy for you either Euro bonds, or we can buy for you government bonds locally, and all those will be bespoke because they are tailor-made for you. You're not buying in a pool. Now, these are individuals, high net worth, ordinary mwananchi, all those ones are dealing. The unit trust and the wealth management will cover individuals mostly. Now, institutions also are part of our solutioning. So for institutions, we are aware that we have the big institutions, we have the SMEs, and we need to cater for them. So we have solutions that are tailor-made for them, either for their own balance sheet management or pension, because we're also a pension manager. Now for pension, we do give solutions to large institutions that have occupational schemes that are...
And that has to be regulated as well?
It is regulated by RBA. So we do give fund management services for regulated pension schemes, occupational schemes. But on top of that, something else we have embraced as a fund manager is the new reforms that are happening in the NSSF through the NSSF Act of 2013, where all of us now, those who are employed, we are required to contribute to NSSF, and for that matter, 6% by employee, 6% by employer. Now, we realized that there was a gap for the SMEs who could not form their own schemes, and so the default was just to go to the NSSF fund. But if you read the regulations, they do allow employers to actually contract out Tier 2 contributions of their pension. So we do offer that in an umbrella format. So as an SME, as a corporate who does not want to hustle around the running around of a pension scheme, we have a solution for them, which you say it is an umbrella. Sponsors or employers join, and we give you that pension solution and you contract out. So we are wide, we give a lot, and we are still growing.
Excellent.
Yeah.
And that's quite a variety of products that you have there. In fact, you mentioned a few things, and I was just curious to know a few things. One, I know that wealth management, I've spoken to several bank heads and CEOs,
Yes.
and wealth management is fairly a new product that came up.
Yes.
I'm sure for you, I think it's about 2 years or so of doing
Yes,
this.
it is.
And I'm seeing how it has diversified the incomes of banks as well, and people are really embracing them. I don't know, what has been your perspective? How's the reception like?
The reception has been quite good.
Yeah.
You know why we love the wealth management proposition is
Yeah.
because we also recognize that people who come to bank,
Yeah.
they come with other needs. They just don't need only banking.
Yeah.
They do require other investment. They want to grow their wealth. So for us at Absa, we are saying we want to solution the client in the banking hall holistically. We want to take care of your retirement. We want to take care of your, emergency fund. We want to take care of your income streams, maybe for your business.
Yeah.
And we also want to take care of you when it comes to protecting that wealth. That's why we have even bank assurance within the bank. So basically, these solutions for wealth management, because it encompasses investments, insurance, and banking.
Yeah.
We're saying we are giving you a holistic solution as a customer when you walk to Absa, whether you're an individual or a corporate.
Okay.
Yeah.
Okay. Excellent. Let's talk to matters accessibility and affordability.
Yes.
And first of all, I know I'm about to ask you that question about your unique proposition, but let's talk first of all about how accessible your portfolio is to your clients and how you've made sure that at least you are at the forefront for them to just choose you.
Excellent.
Yes.
So one of the things you'll appreciate about investments, especially for individuals, is it's been positioned almost like a preserve for the wealthy.
Okay.
So what we have tried to do is to say that wealth management, investments is actually for each and every one of you. So we have solutions that are targeting even the low, what people say, the bottom of the pyramid, where people are saying, I don't have a lot, but I want to start. Because for us, we want to promote the consistency in saving and investing.
Yeah.
So we do have, for example, the unit trust products, which I was talking about, that admit or allow you to invest with us with as little as 1,000 shillings.
Okay.
And you've got 84 branches where you can get a touch point, physical touch point. Previously, again, you will notice that fund management was a preserve for Nairobians, because that is where every fund manager is located.
Yeah.
So with a bank coming on board and opening and themselves to solutioning you at the banking hall, we are saying for that person who is up country, walk to any branch, get information, because we've trained these people very, very well to give you full information and be able to understand what you're getting into before onboarding. So we have products which are very low. And to the whole spectrum, I can say we've catered for everybody. To the wealth management or advisory services, we allow people with as little as 1 million shillings, not just the ultra high net worth, the billionaires. We allow as little as 1 million shillings. You can actually buy a product that speaks to you. So we are very democratic. That's what I would say, in our way of embracing everybody in the investment journey and showing them how to get to the next phase of their life. Yeah.
I want to dig deeper into that, because maybe some viewers here are the guys who have, some 1,000-2,000 to spare here and there, and just to really speak on the, financial affordability for them to really get into some of these instruments that you have. Of course, we have the high net worth, but we also have these guys who
ordinary.
I can get my 1,000 maybe in a week or something.
Absolutely.
Like that. So what products are there that you have
for the ordinary?
Yes.
We have the pooled funds, which we call collective investment schemes. Specifically, I always like to advise that for most of us who are starting our investment journeys, we try with what is least risky. And the reason I say that is because we have emotional attachment to how we are treated by an investment. So when you're starting, I say start with a money market fund, a really simple and low risk kind of portfolio that allows your money to generate a return and at the same time allows you to maintain or preserve the initial capital that you come with. So we are saying as an investment manager, we work very hard. When you bring 1,000 shillings, we maintain it at least at 1,000 shillings, but on top of that, we give you a return. So that means your money is beating inflation, because that is what everybody wants to beat. You want your money to be growing at a rate faster than the inflation. So money market fund are a very good place to start. It teaches you the discipline of putting money aside every time without disappointing and letting your heart go into palpitations. You know, because there's some investment, for example, equity funds. I could tell you that's also 1,000 shillings, but we don't recommend that as a starting point for beginners. Reason being, shares really moving up and down, but we work very hard to train, to educate, to empower, so that we transition you from where you started, the baby steps, you move maybe next to a fixed income fund, next you move to an equity fund, and you'll find yourself actually loving that journey. Otherwise, if we just promise you high returns, we may shatter your heart forever. So for us, it's about working with you.
Oh, you're right. There must be a place to start.
Yes.
Speaking about returns, I have seen some wealth managers out there. We may not mention names.
Of course.
But I have seen some returns that take you back. You're like, wow, okay, how did you get all this? And then we have reputable institutions that have done this for years. And you see they relatively are at a certain average. What are some of the red flags, especially for someone, because we are easily just attracted to, wow, these are the numbers, I just jump in. I'm sure being in the field for quite some time, you have seen some of the red flags, and we have had stories out there, some in our news channels, where people have come out there complaining. What would you say on a general note of advisory for anyone who is considering to jump into this?
Excellent. Now, every time a manager or whoever it is tells you that they are going to invest, what you need always to cast is a shadow of risk. So investment, returns, then risk is a shadow of that, because risk never comes to the forefront. Like you said, you've seen returns, but you have never seen anybody report risk. They report only returns, because that's what we see. That's the fruit that we see when we invest. But accompanying that return is risk. So the best and the most, the fundamental, like rule of the thumb, always investors should always remember, a high return is always accompanied by high risk. High return, high risk. Low return, lower risk. It's not very direct. You still need to dig deep, but that is a fundamental rule when it comes to investing. Now, when you look at the markets and you see different fund managers are publishing different returns, some at the very top, others at the bottom, or things like that, that just gives you the risk profiling that each manager is taking. Our difference, assuming that all of us are investing in 254 Kenya, then we are seeing that we have taken different risk parameters and chosen our investments with different risk profiles. So the higher the return, you might see those guys with a higher return, without interrogating, I would say maybe they have a little higher risk. So I need to ask them a question. What exactly are you investing in, to be able to decipher what risks are they taking? Maybe are they taking more risk than the manager who is at the middle, at the median, or the manager who is at the bottom? So that's the kind of profiling, but you need to do more due diligence. It's not naked eye.
I love that.